The subject of money management is difficult. Many people have unease when they consider the circumstance. Maybe you put off starting your retirement investments a little too long. Or maybe you worry that you won't have enough money saved up for emergencies. Whatever your concerns may be, there has never been a better time than now to take charge of your finances. It's crucial to begin sound financial practices as soon as is practical. A financial advisor could help you establish a financial plan to achieve your asset management objectives and goals. In this video, we will take a look at the top 10 money management tips to get you started. Before starting, don't forget to like and subscribe to our channel for more future updates. So let's start. Number 1. Know your money priorities. Prior to constructing a budget, priorities must be established. If you don't finish this crucial stage, you won't buy into your financial strategy. You must pay great attention if you wish to align your spending patterns with your financial objectives. That concentration is what matters most in your life right now. Do you have credit card debt that is so awful to think about that makes you sick to your stomach? Paying it off might be your top priority. Your financial goals should reflect your ideals, says Patrice Washington, a well-known authority on personal finance, business, and other matters. Traveling overseas or taking care of your body, whatever is more important to you, the larger categories should reflect what matters most to you. By cutting expenditure in other areas, you will be able to save at maximum capacity for your actual goals. You could be attempting to save money for a vacation or a wedding. To avoid being up a creek without a paddle, if your pet needs surgery or your car's engine has to be fixed, you may also wish to set up an emergency fund. Number 2. Determine your monthly pay. According to a saying, what gets measured, gets managed. How do you manage your finances if you don't know how much money you make each month? If you don't already have a number in mind, find your monthly after-tax income. This will be easier for you if you have a consistent salary from work. Freelancers may forecast their monthly earnings. Once you have a figure, including any additional income from side employment, you might run a blog with advertisements, teach a regular exercise class, or sometimes watch after children. Any extra money should be included into your monthly take-home pay. Number 3. Track where you spend your money. As soon as you can, examine your own money. To fully understand your spending habits, you'll need to do some financial forensics on yourself. If you believe it to be excessive, limit it to 1 month's worth of expenses. Bring with you all of your bank statements, utility and rent invoices, credit card statements showing ATM transactions, and any other proof of electronic payments, such Venmo or PayPal. It's time to tally your costs, so start a spreadsheet or grab some paper and a pen. Using categories to divide up your spending is useful. You may classify purchases as necessities, wants, debt, or savings, for instance. You might also add more focused categories like entertainment, dietary costs, travel, and lodging. You choose the amount of time you want to spend in the weeds. Sum up all of your expenditures in one spot, then sum the totals for each category to find out where the majority of your money is going. You could be surprised by your out-of-pocket spending or the percentage gap between your housing costs and income. Number 4. Have a plan. Now that you are aware of how much money you make and spend, it is time to develop a plan. The best financial strategies create a balance between your goals and spending habits. Let's say that you like working out. You added up all your spending and found that, on average, you pay monthly for a gym membership, a yoga class pass, and new sports equipment. If something is significant to you, there is no need for you to eradicate it. But in order to achieve your objective, let's pretend it's an emergency fund, you'll need to reduce other spending. This might include bringing your own lunch rather than going out to dine with your coworkers or purchasing at a budget grocery store. To achieve your financial goal, you may set up an automated transfer to a designated emergency fund savings account. The funds from your paycheck must first be deposited before you can consider them to be spending money. It is entirely up to you whether you want to invest money in a program like YNAB or would like to use a simple Excel spreadsheet. Number 5. Stick to the plan. Practice your strategy for at least a month after making a decision. You need that much time to test it out and see whether it works for you. By handling your money in any other manner, you won't gain anything. Choose a budget that you like, put it into action, and adhere to it. It is that simple. If you desire, Washington suggests that you surround yourself with visual representations of your goals. You may share images of your ideal vacation to keep yourself motivated as you save money for your next international trip. Number 6. Expect emergencies. You should always have some cash on hand, regardless of what your primary priority is. Perhaps you place greater importance on paying off your student loans than creating a sizable emergency fund. It's okay if you don't need to save enough money to pay your expenses for 6 months. However, you should budget at least 3. The future can never be accurately predicted. Numerous things may go wrong, including either you or your spouse losing your job or having a medical issue. Whether you like it or not, life happens. If you have the money on hand to deal with problems when they come, you'll feel safer and a little more prepared. The majority of catastrophes already raise adequate alarm. One worry is reduced by having a money reserve. You choose how much money you'll set aside for unforeseen costs. Perhaps you save the money from your side jobs in a special account that you only use in times of need. Spending any presents or birthday money there is an option. The process may be as simple as establishing a little monthly auto deposit. You are free to decide. Number 7. Save early and often. This rule applies regardless of your current priority. Early savings might result in faster interest generation. You may start earning interest even if you don't have an investment account. Most of the most popular savings accounts provide interest and FDIC insurance. You don't face the risk of losing your money, unlike with a brokerage account. This regulation also applies to retirement. The sooner you start making IRA or 401k contributions, the better. Making planning for the future is always crucial, even if you have some time before retiring. The quickest improvement in your financial situation will occur if you begin going right away. Number 8. Take advantage of free money. Do not underestimate the tools you have at your disposal. If there is a 401k matching program offered by your company, use it. It is free to use. Another thing to look at is your health insurance. Even if your insurance coverage only covers a portion of the cost, do you still have to pay out of pocket for contacts and glasses? Perhaps your work offers a discount on the gym membership. Utilize all the benefits that come with your job to the fullest. You may wind up saving a lot of money. Number 9. Relook your debt. Take a look at the whole sum of your debt. Are there any items you can refinance at a lower interest rate? The solution can be to move a debt to a credit card with a lower interest rate. Consolidating student loan debt is an additional option. By carefully reviewing your debt, you may decide whether you can find a way to save. Number 10. Find what works and keep doing it. Financial management is another area where the proverb, "If it ain't broke, don't fix it," holds true. Keep away from temptations like new apps or rival financial advice after you've discovered a strategy that works. If the less desirable option seems quicker, easier, or simpler, it could be tempting to choose it. As you save money, reach your financial goals, and build stability, things will advance if you're in a routine that works. You'll be rewarded for paying attention. This is it for today's video. What do you think of our video? Feel free to share your thoughts in the comment section below. Don't forget to like and subscribe to our channel for more future updates. Thanks for watching.